Congress is considering legislation on credit cards, and the future of your credit card points could hang in the balance. Paul Weinstein, a senior fellow at the Progressive Policy Institute, and Brian Kelly, founder of the Points Guy website, joined the show to discuss a proposed bill to regulate fees in the credit card industry. We discuss the guts of how credit cards work, why Americans are used to getting points or airline miles back on every purchase, but Europeans are not, and how proposed legislation to lower credit card interchange fees would impact banks, airlines, merchants, consumers, and ultimately your points balance. If you enjoy the episode, please make sure to share it on social media. Give us a like, a subscribe, a comment. All of those things are always helpful. And if you really enjoy the podcast, please support us by going to patreon.com/newliberalpodcast. You can also support us by becoming a member of the Center for New Liberalism at cnliberalism.org/become-a-member. Members get access to bonus episodes, Sticker of the Month Club, our exclusive community Slack, and much more. Thank you for supporting us, and enjoy the episode. Welcome, everyone, to another episode of the New Liberal Podcast, part of the Center for New Liberalism. I'm your host, Jeremiah Johnson, and joining me today are Brian Kelly and Paul Weinstein. Brian and Paul, thank you so much for joining the show today.
Thanks for having me.
Thanks for having me as well.
So this is a fun one, I have to say, because I have been kind of a points hacker for many, many years. Brian, I've been reading the website for quite a while, and it's fun to get a chance to talk to you. And obviously, we're talking not just about like which credit card to pick, which is a lot of, your daily life. But, today we're talking more about the credit card industry and legislation and stuff like that. Very serious economic topics that we're going to get into. But I would be remiss if I didn't kind of just give you a little bit of introduction as far as I just wanted to say the site's always been fun. I've always been a reader. So,
well, thank you.
It's fun. Yeah, it's fun to chat.
Thank you for having me. And I think points are a lot of fun to a lot of people. And I'm excited today to hopefully raise awareness to people that there could be a points doomsday on the horizon based on some legislation. So look forward to chatting all about it.
A points doomsday. That's actually great. I'm going to use that phrasing, by the way. That's a nice turn of phrase. I was never one of the crazy people. Like I probably did at my height, maybe about 7 or 8 cards a year. Which,
that's pretty good.
Like for normal people, that's insane to do 7 credit cards a year. For points hackers, I feel like that's actually very moderate. I'm pretty sure you would have me beat there. But there's definitely a whole game. For anybody who's wondering what we're talking about, there's this game that you can play where you basically maximize your credit cards and rack up as many bonuses as you can and, have a bunch of spreadsheets open at all times to make sure that you're the points maxing in a sense. So this is definitely something people do. I used to be into it. You have to be a big nerd to care about all this stuff. But as Brian has said, there is potentially a apocalypse coming for the points game. And it's interesting to talk about why. There's actually some interesting economic ideas behind what's going on here. So the first thing that I think we should do is describe kind of the facts on the ground. What's happening? And even before we get into the legislation, I think what would be helpful is to describe how credit cards work on a basic level. How do the fees for credit cards work? How do these companies make their money? And what are the proposed changes to how these fees are going to be working?
Yeah, so first let me just say, America is the holy grail of credit cards and options for consumers. There's no other country in the world where you can go and sign up for a single credit card and get over $1,000 in value. Many, many, many times the annual fee. So at the Points Guy, like what I've been teaching people since I started the blog in 2010, is that if you're smart about your finances, you don't need to be rich. You don't need to be a frequent traveler. We've got tons of college students who make no money, who now are able to afford to travel around the world or finance their books for their education. Because in America has a culture of credit. And this benefits the consumer if you play it right. Essentially, you in America can borrow money from banks for free every month. It's like a free cash flow. And not only do you earn points on transactions, you've got about over a month to pay it off interest free. So you're basically borrowing other people's money, earning points on the transaction, and when you pay it off on time, you avoid any interest. On top of that, whenever you use a credit card, you're getting purchase protections and fraud protection. Unlike when you use, debit cards do have some of that, but if you use cold hard cash and someone steals it, who are you going to go running to? Someone steals your credit card, all of those charges are off almost immediately. So I always come at this from a consumer perspective that credit cards are wonderful if you play it right, avoid the interest and fees, earn the points and the protections. And, oh, by the way, you're getting free float from a bank, to fund all your purchases. So this is not the case in most other countries in the world. We can get into why, but mainly legislation. Countries that over-legislate kill innovation, and they kill incentive for credit card companies to offer these types of perks and protections that are amazing for consumers. And we saw this happen in the US. 10 years ago, if you didn't have great credit, you could get a debit card from your bank and earn airline miles and different points. And Senator Durbin, in his infinite wisdom, said, I want to help consumers. And they basically legislated debit card interchange, which said, the amount that, first off, I think it's also important that we discuss the economics behind this. So every single time you swipe your credit card at a merchant, they're paying an interchange fee. And this is the fee they pay to the network that issues your credit card to process that transaction. So let's just say it's roughly 2% of the transaction.
And this is going to like Visa or MasterCard, essentially,
correct,
right?
Or American Express or Discover. And then the bank issuing the card, right? Because you may have a Chase Sapphire Reserve card, which is a Visa, but it's issued by Chase. So the majority of that interchange, Visa will take their cut, which is a smaller portion, and then the rest goes to the bank. And the bank is the one that issues your credit card. They're the ones on the hook if you default on your credit card. They're the ones offering points, protections, et cetera. Although there are also network protections and perks on a card. But in general, there's a bank, there's the issuer, and then there's the merchant. And then there's the consumer. So those are kind of the four key parties at play here. So the consumer uses their credit card. They can choose in America. We have more options for consumers for credit cards than anywhere else in the world. You can choose your local credit union. You can choose Amex, Chase, Citi, Capital One, you name it. You can choose a credit card that gives to charity or your local university. There are more choices for consumers than anywhere else. So I think that's a key point I like to get across too. This legislation is trying to pretend like America, there's no choice. They're calling it the Credit Card Competition Act, as if there's not enough competition. There's no other country in the world with more competition and choice for consumers than in the United States. So that's very important to state that this is a very beneficial to the consumer system. Consumers win, because if, you purchase something, even if you break it, most credit cards have purchase protections. A lot of consumers don't even know about them. But if you buy something and lose it or it gets stolen, your credit card company will reimburse you, no questions asked.
Well, so let's talk for a second about why these fees exist, because we're talking about interchange fees. Again, it's about the 2% that goes to your bank and to the actual payment processor, which is MasterCard or Visa or American Express. And one question that people are going to have is, well, why does that 2% exist? So most people are going to hear about fees, and they're not necessarily going to be in favor of those. They're going to think, well, legislation to get rid of some junk fee, that sounds good. The Biden administration has actually had an effort to get rid of fees in a lot of places, whether it's hotels or Ticketmaster or airlines. They're calling it, a fight against junk fees all over the economy. And so for most people, they're going to say, wait, well, lowering fees is good. That's going to help me. What is the actual purpose of these fees other than just sticking it to the consumer?
So first of all, let's be clear. The consumer does not pay these fees. And I'm totally for eliminating junk fees with hotels. I mean, I was just at a hotel last week that charged $100 a night in a resort fee, and it was totally bogus, right? It's all the things that I should have been included in my $1,000 a night rate, or at least I push, I'm support of brands, being transparent with the consumer. Whenever you go to purchase,
This is why you got to be the points guy, because you're going to very swanky hotels, it sounds like.
So for me, I had to pay, $99 on my free night that I used my points. But my point is very clear here. Consumers, when it comes to credit cards and junk fees, the interchange is not one that is a junk fee to the consumer. The consumer does not see this fee. And in fact, that interchange, that 2%, getting back to why that's charged, because it's extremely expensive to set up a global payments network and to run those transactions between the network and then also the bank. And then think about it. There's so much cyber fraud. The banks eat all of that. And points. So consumers who, if you have your Chase Sapphire Reserve, for example, you're getting triple points on all of your dining. And that's free. That is baked into the cost of goods. So consumers get protections, fraud protection, peace of mind, and can spend with confidence. And yes, there's that 2% fee, give or take, but merchants should realize that that small percentage of their sale gives the consumer more confidence. And in this day and age, they also get data from those transactions. And there's a lot of studies out there that shows when consumers are earning points and they know their purchases are protected, they'll shop and spend more on a credit card than they would if they were using cash. So the payments platform that we have set up benefits retailers, benefits small businesses. It encourages people to spend more at their businesses. Plus, it gives them the data on their purchases. Any smart business these days knows that you need to see the data and the trends on purchases to buy better products. So if you all of a sudden disincentivize consumers from using credit cards and having cash be the same, you are going to, in the end, hurt your business way more than that interchange fee. So simply put, the interchange, which is paid for by the retailer, funds consumer perks and points and protections. So if we take down that interchange like Durbin did a decade ago with debit, I'll tell you exactly what will happen because we know. So what Durbin is now saying is, we want to take down that interchange because these really nice retailers, they promised us that they're going to pass that savings down to the consumer. Don't you worry. It's going to trickle down and we're going to see mass decreases in prices and everything.
Yeah, this would be the economic argument, right? That even
Correct.
if consumers, the theoretical argument here is that, even though consumers don't directly pay this, it's paid by the merchant. If you put if Congress put a 20% tax on all purchases in America, even though it's the merchants paying the tax, prices would increase for consumers. And that's the idea here. But do you think that would actually happen?
I know it won't happen. We all know this won't happen because they did this with debit cards. So Dick Durbin, who's sponsoring, Dick Durbin basically said, debit transactions used to earn points and protections. Well, Dick Durbin, he slid in at the last minute through Dodd-Frank. They like to use, politicians like to use a crisis to slam through legislation last minute. So they did this with debit rewards a decade ago and said, we're going to limit the interchange to a fraction of what it is. And overnight, banks stopped offering debit rewards because the interchange is what funds rewards, period. And so anyone listening, the interchange funds rewards. When you lower the interchange, you lower rewards. And overnight, pretty much overnight, every single debit card that offered rewards stopped offering points and miles and rewards. So tell me how that benefited consumers. All that did, it saved merchants a lot of money on processing, but consumers, especially low-income consumers who couldn't get, an Amex Platinum that were using their Continental Airlines debit card through Chase, which I had myself when I was in my 20s, and I loved it. I had a debit card. I wouldn't spend with, outside of my means. Overnight, Chase couldn't afford to offer points on it because the interchange dropped to near nothing and protections went away. And so with legislation, there's always the law of unintended consequences. Well, when the banks make no money on a product, you used to be able to get free checking accounts, free debit rewards. When Durbin passed his last legislation, it destroyed all that overnight. You can no longer earn points on debit cards. So now let's go to, I'm sure consumers globally won because prices dropped drastically across the board, right, Brian? Because those nice merchants who are saving on debit, I'm sure they passed it all to the consumer, and of course not to their shareholders. And you don't have to take my word for it. The Federal Reserve, 3 years later, in 2015, the Federal Reserve Bank did a survey on small businesses and large retailers and said, how much have you lowered prices now that debit transaction, the cost of interchange went down? So how much went to the consumer? And I believe the numbers are like 90% kept prices the same. Like 8% dropped prices and 2% raised them. So what happened is the retailers saved money and they passed it to their shareholders. And so that is a perfect case study for what will happen. So that was a huge, Dick Durbin is for the retailers. He is not for the everyday consumer who's getting cash back and rewards. This is a legislation that will give billions of dollars. It's a transfer of wealth from consumers to shareholders of the big box retailers. That is what will happen. And that's why I say this is a doomsday. I'm not kidding. If you like being able to go out and earn points, and if you spend $600 on a credit card that's going to give you perks, and you want to use those points to go to Hawaii, and you're used to earning 5x points on airfare on a certain card, that could very well drop to nothing, or you might be earning a half a point per dollar, because that's if the interchange is dropped. And probably more frustratingly, with the Credit Card Competition Act, it is a little different, and they'll say, oh, well, this is completely different than the debit card. The debit card, they straight up legislated, the interchange down. This one's even trickier. They're saying, no, Visa can still exist. However, every credit card will have to have 2 networks. So think about it. Your Capital One Venture card earns 2 points on every purchase. It's one of my favorite credit cards. If this legislation passes, Capital One would be forced to put a very bare bones network like Pulse. Pulse is basically a debit network where you get no rewards and no points and no protections, or very minimal. How annoying will that be? Every time you go out, your credit card, your Visa, will have a separate, very bare bones network that the retailer can say, no, we don't want to give you the points because we want to save money. Sorry. So I don't know, my opponents on the other side of this are saying, well, retailers need it, inflation, and trust us, the consumers are going to save, but it will be catastrophic for the consumer. I am 100% confident in that.
I just wanted to add, I think we have another case study that proves Brian's point as well, which is Europe. And I know Brian could actually probably talk about that better than I can, but the fact is that in Europe, you don't have points really the same way that you do in the United States. It's a very much a downgraded system. And in fact, most Europeans prefer to use their debit cards, and they don't use credit cards the same way that we do. And that has a lot to do with the point system. They obviously do cap their interchange fees there. And so you can see the direct correlation. There's no interchange fees. There's nothing to therefore support the kind of point system that we have here in the US.
Yeah, 100. I mean, ask any European, frankly, ask any person who doesn't live in the US. Even in Canada, they are regulated much more than us, and they have decent offers. Australia is okay. But in Europe, I mean, Germany, everyone just uses bank debit. And so they're missing out completely. I know people who will ask, European friends of mine will try to get transferred to the US so they can get a social security number just to get credit cards. And when I, stress enough, these credit cards, they're not just for the ultra rich. There was a New York Times ridiculous opinion piece that, the ultra rich are the only ones getting rewards in America. And that was just a flat out lie. I know because my website, which gets 12 million plus visitors a month, our readers are stay-at-home moms. Our readers are college kids whose points, because they're smart about their credit in college, and we teach them, if you pay your bill in full every month, your score goes up. So I want to stress too, the value of getting into the credit card game responsibly doesn't just get you points, but it actually raises your credit score. And what in America, when you're responsible with your credit cards, you get a higher credit score, which means you get a lower mortgage rate, which you get lower lending rates.
So I want to jump in right here, because I think the Europe point is really interesting. And I think a lot of what we're saying here is accurate, that, look, if we regulate away interchange fees, the banks are simply not going to be able to offer a huge amount of credit card perks that they do right now, whether that's points and some of the other stuff. There are cards that offer like free airline lounge access, and there's all kinds of stuff. And a lot of that will go away if you make this, mandatory low fee kind of thing happen. I could imagine someone, though, who says, yes, I accept your argument that we will turn into Europe if this is, if we put this legislation through. And I just think the European system is better because they have lower fees and they don't have as many perks. And it's just a better system if everyone's using a low fee debit card with no points. How would you respond to an argument like that just the European system is better in general because the fees are lower and so overall price level will be lower, and just this whole credit card points game is a shell game played by weird nerds like you and me,
Yeah.
What would you say to that kind of hypothetical argument? If somebody says, yeah, I like the European system.
Well, yeah, I will speak for consumers and millions of my readers who get to travel the world and have fundamentally better lives. You talk to millions and millions of Americans who these days travel so expensive. The only way a lot of our readers get to visit family is through their points and their credit cards. I could go into countless stories where the whole loyalty industry, has changed people's lives. I mean, even Make-A-Wish and charities, they get millions of dollars worth of airline donations a year, which fund their wishes. 70% of Make-A-Wish requests and require travel. Now, let me also just get back to the point. These loyalty programs are huge economic drivers. It's not just the banks that are making a lot of money on these points, and banks obviously employ a huge amount of people, but the airlines, there will be catastrophic impacts on the airlines. Delta Airlines and their relationship with Amex, United, and Chase, they make more money with their loyalty program and credit cards than they do flying airplanes. So you tell me, what will happen when our government comes in and legislates down credit cards to where they're worthless, and the largest piece of revenue for all the major airlines gets halved or cut into third? How do you think the airlines are going to make up for that massive loss in revenue and profitability? They're going to raise airfares. They're going to raise fees. So I just stress to people enough, the European model, I don't believe that Europeans pay less for goods than they do in the United States. I don't believe that European retailers are thriving and innovating more than they are in the United States. In fact, there are probably a lot of metrics that'll show you that the US economy is booming and even our airlines are healthier.
The airline question is interesting because the US airlines, while they have been bailed out, it's one of the few countries where, most national airlines seem like they are either state owned or like heavily state supported and subsidized in most major countries. And the U.S. airline, it's one of the only places where that's not true. And again, you can kind of argue if we've bailed them out before, that's kind of like a subsidy. But the U.S. has some of the only actual profitable airlines in the world. And it is interesting that a lot of that profit comes from them essentially being banks rather than actual operators of planes. It's a weird scenario that they're in.
And also, Jeremiah, that we have our airlines, we have choice, which the Europeans don't have, right? They don't have a lot of choice when they want to look at different airlines to fly from one place to the other. Not to say that the U.S. is, has the great choice it may have had 20 years ago, but we still have more choice than any other country in the world.
They're still kind of like the low cost ones over there, like Ryanair and stuff like that.
A couple,
right?
But there's not. It's nothing to the extent the kind of choice that you have here. But yeah, I mean,
I would just say in Europe, if your debit card is stolen in Europe and someone steals your money, you don't get reimbursed like you do in the U.S. The consumer protections are far lower. So to the person arguing, oh, life's better in Europe, well, the consumer earns less points, which is less value to them, hands down, and they have less protections. And I just don't fundamentally believe prices are so cheap across Europe because interchange is lower. I think it actually, pushes down innovation. It pushes people, consumers to spend less. So there is no way you would convince me that the model of no points, no perks, no innovation and marketing is a positive one for consumers.
I think those are all great points. And I think you really do have to understand that this is not really being done for consumers. This is being done, as Brian says, for the retailers. And that's fine, but you need to be honest with people about that. The consumer is not going to get, the benefits that are being espoused here by the proponents of the legislation.
Yeah, I also just think it's wild how, Senator Marshall, who's a co-sponsor, normally, Republicans would be completely against this, and most are. But they tried to hold up the defense bill. So I want people to understand, the retailers are salivating. They nearly held up billions of dollars in funding our armed forces to slip this through this past August. They are hell-bent on getting this through. They almost, and I see they're gaining traction. This isn't, most people will say, oh, Brian, come on, the banks are so well funded. They'd never let this pass. But I'm like, the retailers have huge pockets, and they already did this with debit. Durbin did it once, on a small scale, and they are salivating to get this through. And the only way this isn't going to pass, 2024 is an election year. Of course, at the Point Sky, we are vehemently against this, and we've activated our millions of readers. You have to email your senators at a very minimum, because they see this as a toxic issue across. I joke, I'm like, this is the last bipartisan thing we have left in America. Our country's so divided. I love that I get to run a website on travel and points, whether you're a Democrat or Republican or independent. We all want to save on airfare. We all want to,
just wait until the Trump card comes out. It's the last thing he hasn't put his name on yet. I'm pretty sure.
Well, I know it'll come out. The same people who did the Kardashian card years ago, that shut down pretty quickly. But when you actually break through to consumers, it's very. Any moderately intelligent person will be like, wait, this doesn't make sense. And so I just highly recommend to people. We have a site, protectyourpoints.com. It'll take 30 seconds. And it matters. My friends work in the legislative offices of a lot of lawmakers, and they get, they give the senators weekly reports. And I think as long as we can create enough, hey, look at everything going on in the world. We've got wars, we have huge issues, we have homeless veterans, mental health crises, gun crisis. The fact that our Senate is truly going to try to pass this bill, which would harm millions of consumers across all parties, is mind-boggling to me. But they will if we don't, kind of say, hey, look, come on. Let's focus on the things that actually matter here.
So there's another angle that I look at this from sometimes. And again, I am someone who has absolutely taken advantage of this system for many years. I get more out of credit cards than I put in, certainly. And I've been maximizing my value with different credit cards and different, ways to kind of play that game. But there is a way that I look at this where, look, ultimately somebody pays. If I'm getting more out of the system than is being put into it, then that value's coming from somewhere. And I think you're correct when you say, look, the majority of stores are probably not going to actively change their prices in response to something like this. We know this, I think, just because the majority of stores don't differentiate between a credit card price and a cash price. Now, some of them do. I go to a bodega here in New York City where they give you a little bit of a discount if you pay in cash, but most stores don't bother with that. And the vast majority of transactions in the U.S., they don't charge you a different price if you're paying with credit or debit or cash,
because they know allowing that will make them more money. What
that ultimately means, though, is that to some extent, people who pay cash are kind of subsidizing my credit card points in a sense, because, the rational, kind of air quotes, rational thing to do would be to charge different prices for a credit card and cash. But, the people who pay cash are ultimately kind of paying for my credit card points. And I've thought before, is that really a fair system? And I'm taking advantage of it. Look, I love my credit card points, and I have flown places all over the world with those points. But I can see an argument that would say, look, people who pay cash tend to be less, a little bit less wealthy, less well off. And those people are ultimately subsidizing this whole system. And that's not fair in the end. I don't know if I have a firm conclusion about this, but it is something that I think about, that, people who are less savvy.
Well, I would say I agree that people with debit or cash equivalent should be able to earn rewards, but Durbin killed that a decade ago. So, I don't think it's fair what Durbin did, boxing lower income people out of the reward system, because they should still get protections as well if they're buying the same priced item. So my point is we should kill Durbin's last agreement amendment and allow people to earn points on debit as well. And just back to if a merchant doesn't want to pay interchange, and remember, the interchange is, to run this vast global network, there are fees involved with that. You can't basically have MasterCard and Visa, who set up and spent decades building this network, and then just cut them down to nothing. What I say is there are plenty of other ways you can process payments. My Verizon bill, I get a discount if I connect my bank account. There's a new startup called Catch with retailers, where if you pay directly and avoid payment systems, you get up to 10% merchant credit, which then builds loyalty so they can avoid interchange and invest instead in giving people credits to come back. And that startup is blowing up with this success. So there are plenty of competitive ways beyond credit card system. So instead of just punishing the existing credit card system, I think we should it's a free market economy. Retailers who want to avoid that fee will give your consumer an incentive to pay with their bank account.
Yeah, I'm sympathetic to that. I kind of go back on this because I'd never call myself libertarian, but I have libertarian-ish kind of leanings sometimes, I would say. And so the argument of just, look, this is a free system, let people do what they prefer to do, this is all free interactions, just let it be to some extent. I'm very sympathetic there, but I'm also sympathetic to the idea that, look, credit cards make money off of people who are not savvy. I can play this game and I know to pay my bill on time and I'm very responsible. And so I get a lot of points and I extract values from Chase and I extract value from American Express. And this is very positive for me. But ultimately, if everybody was able to do that, Chase wouldn't exist, American Express wouldn't exist. The reason they make profit is because there are people who don't pay on time, who don't maximize the system, and who pay a boatload of interest. And I look at this as there's almost this push and pull between the libertarian value or just the free market value of look, free exchange is good. When you give people choices, they can responsibly make their own choices, versus the idea that, some people are being taken advantage of in the system, or they're bad at it and they're losing money. And I don't know. How do you think about kind of the push and pull between those two ideas?
I mean, look, in life, there are winners and losers. And if you put your time and effort into getting into college, or we shouldn't dumb the system down because some people don't feel like paying attention to it. So then no one can. I don't believe that is economically makes sense. I think we'd lose jobs. I think the system, I don't believe there's a completely fair system anywhere in the world, let alone America, in terms of how the world works. Is the world fair? No, it's fundamentally not on every level. So I don't necessarily agree that the government should legislate every sort of industry. I do believe there should be transparency, and I'm all for, payday loans that are predatory. Businesses that aim to hurt a consumer absolutely should be regulated. I don't believe that the rewards ecosystem, which is pretty transparent, and once again, you don't have to be a millionaire. You don't have to be, someone investing hours and hours a week into this. Every day, people can get rewards, cash back. It's not even just for people who want to fly. It is very, you don't need a high credit score to get a Chase Freedom card, which will give you 1.5% back on everything you spend. So I'm just not a believer in let's try to have the government make the world fair.
And this is maybe a question for Paul or for Brian. I'm not sure which of you guys might know this, but I find myself curious. How do most of these credit cards actually make most of their money? Because, there's various ways that they make money. They make money from interest payments, people who, actually hold a balance and pay interest. There's late fees, there's annual fees, there's interchange fees. Do you have some kind of sense of how important interchange fees are actually in terms of revenue? Are they the leading source of revenue, or are they a small source of revenue compared to the other stuff?
I mean, I don't have the exact numbers, and I think it depends. Certainly when you look at the credit card market, there's subprime and prime, but in the premium reward space, interchange is critical because most people are not revolving huge balances on high-end credit cards. There are annual fees, which do bring in a decent amount of revenue. Plus, the credit card companies now, they have partnerships with retailers. Chase is its own travel agency, Amex as well. So there are plenty of ways. It's not like the credit card companies are going to go away overnight if interchange is cut. But what will happen is what Americans are used to today, getting triple points, quadruple points on your goal, for dining, groceries, gas, office supplies, that will all get watered down. And simply put, that will not be good for consumers or, frankly, businesses and small businesses when people are spending less and, redeeming less points, which I do believe spur economic growth.
I think that's an interesting point because we can definitely frame this as, this is not about consumers. This is a fight between credit card companies and retailers over who gets to have the bigger share of the pie. And I think that framing is mostly accurate. People are not really thinking about consumers here. This is a retailer-led push. But at the same time, you could make an argument the retailers might actually hurt themselves, even though they think this is a win for them. The research is pretty solid that I'm aware of that, having access to easy credit, what would you say? It makes people purchase more. It kind of makes you more likely to buy something as opposed to if you have to use cash or if you have to use debit, which is like a cash equivalent. Access to credit increases spending. And so I wonder, is this, kind of shooting yourself in the foot a little bit from the perspective of the retailers? Yeah.
100%. You're going to save 1%, maybe, let's call it 1%. Consumers are going to be really upset and annoyed at this system and will shop. If your retailer decides to just run it on the crappy network, right? You're going to piss off your employee or your best customers, and it's not going to be good. Like even just the value of points, there'll be a huge reduction in the amount of points. And points these days are not just used for free flights. I mean, points are used on Amazon and purchases and economic growth. So I think when you look at the holistic number, I 100% believe that everyone's going to get hurt by this. And we should let, retailers, if you don't like paying Visa, well, then create a more compelling credit card of your own. Or give incentive and rebates for people to pay with their banks. I just hate this notion that, it's the poor retailers have no choice in this matter. This is simply a huge lobbying push that they know they'll be able to shift the savings and interchange, short term to the shareholder value, but long term, I 100% believe they're shooting themselves in the foot.
So, just to fill in your back in your question, Jeremiah, in terms of revenue for the credit card industry, interest income is still the biggest piece of that. It's just under about 50%, close, not quite over 50%. And then we're talking about revenue, not necessarily the profits here. And then interchange fees and other exchange fees. So not just interchange, but other exchange fees. That's about 20% of it. So interest is still the biggest piece of it.
Yep, but interchange at 20%, that's still a pretty critical point of revenue. Yeah.
Well, that's all exchange fees. That's all exchange, right? Yeah, so interchange fair. Is in there, but so yes, there's still absolutely there's still money to be made. I mean, no one is saying the credit card companies are in this to make money, and that's true.
So how far along are we in this process? We've been talking about this hypothetical bill, but politically and kind of just from the mechanics of government perspective, where is this bill right now? How far along in the process are we? What kind of chance would you say this actually has to get passed in the next, 3 months, 6 months, a year? What are we thinking is kind of the realistic scenario here?
Well, so, they tried to suicide mission this in August with the defense bill. And then, of course, we had our lapse in leadership in government. But when Senator Marshall finally backed down from the ledge, apparently he was given assurances, hey, we'll vote on this, not now, but by the end of this Congress. So by the end of 2024. So that he's been given, that from what we hear, there will be a vote on this, or that's what he was promised. Now, who knows if that's kept up, change in leadership, et cetera, where this lies on the priority list. So I don't know. I mean, anything could happen. And I think Senator Durbin is a skilled tactician, in DC. I would never underestimate him. In my gut, I think if enough people speak up and enough, especially moderate, on the fence people who are up for re-election next year say, do I really want to rattle a bee's nest for no real winner? Do I really want to pick consumers and banks and, And a lot of, Democrats have been kind of coming out for this, but a lot of the Democrats and even the leader of the Senate is from New York, which has a huge banking industry. So I don't know how this plays out. I'm hopeful it doesn't. I'm not skilled enough in legislative politics to, my opinion would really matter. But I do think there's a viable chance, and people should not think, the banking lobby, they've got this.
All right. Well, we're coming up on time soon, but I want to ask, I feel like I would, be remiss if I didn't ask this. We're talking about kind of the serious legislation here and the economic stuff, but I can't have you on the podcast and not ask, what credit card tips do you have for people who are curious about all this, not from an economic sense, but are realizing, wait, maybe I should get into the credit card points game? Do you have kind of, number one, number two kind of top tips for people who are beginners interested in all this?
Yeah. So if you're a beginner, you've probably been missing out on thousands and thousands of dollars. So instead of feeling bad about that, it's actually a blessing because you can probably apply for credit cards a lot of other people can't. I would say when you're going to get your credit card, see if you're targeted for offers. Like if you don't have any American Express card, you can see if you're targeted for special offers. At the Points Guy we have, it's called Card Match. It's a tool you put in your last four of your social. And also open up your mail. A lot of times banks will mail really rich offers to you directly. But there are a number of different cards out there. I would say like the best overall cards, Amex has the gold card, which is 4 points per dollar on dining and groceries. So I think most of us spend a lot in those categories. My recommendation is get credit cards that reward you where you spend the most money. There's also, if you pay rent, there's a new credit card called Bilt, B-I-L-T. There's no annual fee and there's no fee to pay rent. So you can get up to 100,000 points a year for paying rent via check or direct deposit to your landlord. And once again, no fees there. And those points transfer to United, American Airlines, Hyatt. They're really valuable. And Capital One Venture X is probably one of the best new entrants. You earn 2 points on everything. So what I say is like use a card like Amex Gold, 4X on dining and groceries. And then for anything where you're not getting bonus, you put on Capital One Venture for 2X base earn on everything. And then if your rent is being paid, all of a sudden you've got tons of points adding up for all the expenses you were already going to make. And I'll also add, even for people who don't want to get a new credit card, it's holiday time. When you shop online, you always have to shop through online shopping portals. And shocks me how few people know about this. But basically, you go, and at the Points Guy just Google like online shopping portals, the Points Guy, we have a whole primer. But you earn airline miles when you put your frequent flyer number in. It stores a cookie on your computer. And then when you shop through retailers, you earn up to 30 miles per dollar spent, in addition to using your credit card. So you can earn Amex points on the purchase and then American Airlines miles for going through their shopping portal. There's all sorts of crazy bonuses. So always double dip. Earn points for your yeah.
I couldn't have let you on the podcast without, talking a little bit about the points game.
Yeah.
I wasn't back in the glory days when you could just like order stuff from the US Mint
and get free points. Wild. That was wild.
For listeners who are not aware, like you used to just be able to order like silver dollars or something for $1 from the US Mint. You would pay them $1 online and they would just send you a physical like silver dollar or whatever. And the thing is they would let you pay with a credit card. So you could just order like thousands of dollars of physical dollars and they would send them to you. And so you were ordering money and paying for it with a credit card and then just pay your bill with the money that you got. Is like an infinite point sack. This way back in the glory days. I was not. Yeah.
Yeah. People had like pickup trucks filled with like thousands of pounds of coins, and banks were like, because the U.S. government had free shipping because they wanted people to start using those dollar coins, which no one wanted to. So of course the points people, we took it to the next level and we're ordering pallets of coins, taking them to banks. The banks hated it because they're like, okay, this defies the purpose. But yeah, it was we call that manufactured spending, and there are still similar ways to do it. But
there are still some ways. I have ordered the $500 Visa gift cards before with a credit card. So that's
if you're going to go to someone's wedding, don't give them cash. Buy a Visa gift card. You can buy it at a grocery store for 4x points on your Amex card, gift cards, and then give gift cards instead of cash for like wedding gifts, graduation gifts.
That's a little bit advanced for most. I do not encourage most people to get into that unless you
Yeah.
unless you are really a nerd with a spreadsheet who wants to like track this stuff like crazy. But we are coming up on time now. I don't want to keep you too long. So I'm going to ask the traditional final question that we ask everyone on this podcast. And I'll actually throw it to Paul first and then to Brian. But the final question we always ask here is, where can people go to learn more? If they're interested in what we're talking about, if they're interested in the economics of credit cards and this legislation and interchange fees and what's going on here with the actual economic issues, where can they go to learn more about this?
Sure. And I would suggest people come visit us at the Progressive Policy Institute or ppionline.org and go to our website. And we have lots of information on this. There's a paper that we did that came out in October, and people want to read that. They can find it right there on that website. And it'd be great if they check it out.
And so we have protectyourpoints.com. We'll bring you to the Points Guy, our landing page. Highly recommend reading up on it and taking the 1 minute to email your senators if you feel a certain way about this, if you like your points, if you don't want the government coming in and ruining a system that's very beneficial to consumers. And then, of course, the Points Guy on social media. And then my personal Instagram, and I will do updates on this as this moves legislatively, is at Brian Kelly.
I'll throw in one more thing, which is that, the Federal Reserve has put some really good research out there about how the economics of credit cards work and kind of the interchange fees and the whole system of credit card pricing. There's some good stuff out there from the Federal Reserve. Always worth checking out their research. But I guess we're going to see what happens. We're providing people tips on credit cards, and we don't know if they'll be around in a year. We'll just have to wait and see. I want to thank my guests one more time for coming on the show, Paul Weinstein and Brian Kelly. Thank you so much.
Thanks for having me.
Thanks.